Hi everyone, we're going to go ahead and walk through some of these things on how to do a DCF. So first of all, some general information, and this is all included on the sheet that we're going to send off you with the instructions, but anywhere you see blue font, so you can see up here share price, shares outstanding, um, these are all going to be hard coded, which means that you just entered a value in. There's no formula. Black formulas here, anytime you make a formula just on a cell, it's going to be black, like you see down here where it has for multiples, and then green is going to be a link to another sheet. So if you see a cell that's highlighted green, it's going to be linked to some other tab within this model. Uh, Moving on from there, all these instructions that we're going to give are going to be based mostly on if you're using Windows. If you're using a Mac, then using another service so that you can use Excel in here is going to be helpful in terms of using some of the shortcuts and other things that we're going to mention. Kartik, did you have any advice on that? I know you have a Mac.
Yep. Yeah. So I have a MacBook Pro and I just ended up installing Windows on my Mac using something called Boot Camp. Both the Windows installation guide are free and the whole Boot Camp thing is too. So if you want to do that, ask me in class and happy to help.
All right, great. So whenever we're going over this, you also see these notes or comments, which are in some of these cells that would be marked by this red little arrow thing in the top right corner. So if you just hover the cell, it'll give you some more information about it. We'll include some of the shortcuts as well when we're walking through this, and the goal is that you're using your mouse as little as possible when you're going through the model. So I think it'd be great practice, but moving on from there, feel free at any point in time when you're going through the videos to pause and go back through to just make sure that you're doing something right. Um, and I think we are ready to move on. There's also some common mistakes that you'll see at the beginning of the instructions sheet. I think that's more applicable to once you finish, you can go over it. It won't really make as much sense if you're just starting out. But with that, I guess we'll move into the first step. So the first step in building out the model is going to be downloading the historical information. So we included instructions on how to do this through Backset or CapIQ. And if you don't have a subscription to either of these services, at the very end of the instructions sheet, there's an appendix with links on how you can do that. So within the model, we've already included an income statement, a balance sheet, and a statement of cash flows here. These have all been downloaded from CapIQ, and we won't necessarily walk through here on how to do it, but like I said, there's already instructions on here, and your sector leaders will be more than helpful as you go through the pitches on how to download and copy and paste those over. So going back here to the free cash flow tab, this is going to be your main tab where everything's going to output and where most of your calculations are going to be done. So I guess we can just walk through now here. We'll go into step 2, which is going to be linking things into this tab. So we already have some of these hard-coded pieces of information here, but we'll start up here with the assumptions in the top left. So cash, you're going to link to the balance sheet because that's where you find your cash balance. So we'll go over here, and then you want to make sure you can see the dates up here in the top. You're going to want to be in the most recent full year, so that's going to be the year ending January of 2020, and you're just going to link that to cash. Debt here, you can hit equals, and then we'll tab over here to the balance sheet so that we're not using our mouse, and then we can move down. And so for debt, you're going to want to include long-term debt, the current portion of long-term debt, which is going to be the amount that you have to pay for long-term debt within the upcoming year, as well as any short-term debt. So here, this is the long-term portion of long-term debt. We're going to scroll down here to where it says current portion of long-term debt, and we're going to add that. And then we are also going to, oh, it looks like I made a little mistake here. If you see in the formula bar, I put equals instead of plus. So I'm just going to correct that. And then we can hit plus again, and we're going to add in I had to click back in the cell. We just have to add in the short-term borrowings here, because these are also interest-bearing borrowings that are short-term in nature. So we're going to add that in, and that's going to be our total debt here. And you see that this cell we already linked as green when we built the model, just because that's signifying that it's linking to another cell or another tab, within the model. So effective tax rate, we will actually calculate on the sheet, and WACC will come into play later. So we'll move on from there. We'll go ahead and link 2020 revenue, as well as some of these other things, just so we can start building out the model. So revenue. That's going to be on the income statement. So we'll hit equals. We'll use control and then page down in order to go over to the income statement. And we want to link the most recent revenue number. So that's actually LTM there. So this is one of the things we highlighted in the instruction sheet. You'll want to make sure that you're not using necessarily just the rightmost column. You want to make sure you're using the last full year of results. And so you don't want to use this LTM number here, which I'll go ahead and just close this. I already hid these within the model, but we'll go back to free cash flow. We'll hit equals here, go to the income statement, and we will go total revenue, and for that most recent year ending January 2020. So moving down, you don't have to include EBITDA here because EBITDA, again, that's a calculation. So we want to have as many calculations as possible, and you don't want to just link things from just the output that CapIQ or FactSet or whoever's going to give you. So the next one we're doing is EBIT. We're going to go here. EBIT is just another word you can think of generally for operating income. So we're going to link this number in here. And that's going to be good. Then we're going to include depreciation and amortization, which we are going to find on the statement of cash flow. So on the statement of cash flow, it's going to be a positive number. So here we'll have to do equals and then hit minus. And we'll tab over using control and page down to the statement of cash flow. And we will do depreciation and amortization for the most recent year. And see there, it includes it as a minus. So then here we can go ahead and calculate EBITDA. We can do EBIT and then minus the negative number to give us our EBITDA. And I guess those are backwards, so I'll go ahead and change the color on EBITDA here. And so if you have the FactSet plugin, you can actually do control and then the apostrophe, or you can do the semicolon key and it'll cycle through different colors. So this one is also a link to a different cell, so we can do that as green.
Also, as a note for the DNA, you always want to make sure that you're using the one from the cash flow statement, because a lot of the times the one in the income statement, GAAP doesn't really have a provision where you have to include all your DNA on the income statement. And sometimes there won't even be a DNA line item, but the cash flow statement DNA is always the accurate number. So make sure you don't pull it from anywhere else.
Absolutely. So then here what we can do is we can include some of these other pieces of information. So we'll do taxes next. And so we will do equals, and we will go back over to the income statement for the tax expense. So we'll scroll down here, tax expense. It looks like it's a positive number. So that means that once we link it, we'll want to add the negative into it. So see, I already clicked equals and then went and scrolled over to it. So I can't just hit negative here. An easy way to do this is now I can hit F2 and now it'll put me into the formula bar and I can usually scroll over. Looks like I can't see that right now, actually. Here, I'll just restart. You can hit equals and then the negative, go back to the income statement. We'll go down, and right now you can see I can move a little bit faster using control and then the arrow keys. Control will move you to the next filled in thing. So for example here, if I'm scrolling through, all of these have text in them. So when I do control and then the arrow keys, it's moving me down to the last thing that's filled. So this next cell is empty, so it won't take me to that one. And that's just an easy way to navigate around in Excel. So then here, if I want to get to NOPAT is just going to be your EBIT, and then you're going to subtract taxes. So you can just do this plus the tax expense, and that's going to get you down to NOPAT. Depreciation and amortization, this is going to be positive here because you're adding it back to get to free cash flow within the free cash flow formula, and this is something that's covered in the valuation course or class that we'll do. So you just do equals negative, and then you can just again link it to this cell up here. That's going to be the easiest way to do it. Net working capital, we will solve for that in a later video. So we can just leave that blank for now, but CapEx we can also fill out here. So we can do equals, and it's going to be on the statement of cash flow. So we will use control page down to get to CapEx, and see it's the first item here in the section for investing. So we'll link that in, and then we can just go ahead and set the formula up that we're going to use for unlevered free cash flow. And so what it's going to be is you're going to do equals. It's going to be NOPAT plus depreciation and amortization. And then we can just go ahead and do plus the net working capital part right here. And we'll have to make a specific note once we go through there, because you're adding a decrease in net working capital, but you would subtract an increase. So we'll just have to make sure that the positive or negative is correctly done on that certain slide. And then we can go ahead also here and just add this number for CapEx, because spending money on CapEx decreases free cash flow. And so there we calculate free cash flow. So then for some of these other things here, we can just go ahead and calculate EBITDA margin, EBITDA divided by, and it's going to be your revenue. We can also do the same for EBIT. So it's going to be EBIT divided by your revenue. And that will basically take us through the last of the hard-coded information on here. And then I think Karthik is going to walk through on how we're going to go about projecting some of these numbers.
Yep. So I can start sharing my screen too. And essentially, we're going to start off with just the 2021 E numbers, and make sure when you're moving along, you're using your arrow keys, as Brad said. And we're going to project revenue off of percent growth, right? Every company is not going to have stagnant growth if they're a good company. And so to link that growth, we're actually just going to look at our historical numbers. So we're going to we can go to the income statement here. And you can see that over the past 5 years or so, they've had a 5-year trailing CAGR, compound annual growth rate, of 1.7%. So that essentially means that, after accounting for all the, the periodic volatility of a return, they've been growing at 1.7%. So we can use those historical figures to pull forward our future expectations. So I'm going to hit equals, go to the income statement, and I'm just going to link that 1.7%. And now you're going to hit F4 once, and that'll lock that cell in place. And what that does is, now when I pull forward that 1.68% here to the future years, I can just press Control R, and it'll move it'll keep the same cell, but across different years. If I didn't do that, and I just had I7 unlocked in, excuse me, look what happens here. Oh, well
it's still linked.
Yeah, it's still linked. So once it's unlinked now, and I pull it forward, it's 0.0%, right? So we always want to link. Okay. Now from here, what I'm going to do is I'm going to press equals, and the previous year revenue times 1 plus the growth rate. Hit tab, move to the next cell, and we're just going to copy that cell moving forward. And a good practice is, as soon as after you move cells forward, you put in a formula, hit F2 and just make sure all your cells are linking as they should be. So we know that's good. And now we're going to go in and we're going to do the same thing for EBIT. Okay. And so to project EBIT out, we don't necessarily project it based off of growth rates as we do revenue, but we know that EBIT is tied to the margin. We know that EBIT, at least in historical, it's been 4.1% of their revenue. So so what we're going to do here is we're going to go to the income statement. We're going to go to operating income, and you see there's a trailing CAGR here too, but we want to see what is the percent margin on that, right? So I'm going to make a new line by just hitting Shift space and then Control plus, get a new line there. Hit operating margin. Now, what I'm going to do is I'm going to do operating income over total revenue. Move that forward for all 5 years. And you see how it says 0.0%. If I hit Alt HP, they become percentages. So now we know that our 5-year operating margin average is going to be 4.5%. So we're going to pull that, and we're going to use that for every year of our projection period. So we're going to go down here. And if good shortcut is too, if you see here how that 4.55% is on its own little cell island, there's nothing really surrounding it. If you press Control and then the arrow key, it jumps. You see, it just skipped all of these cells, just went straight to the end. I hit it again, goes straight to where I want it to. It's a cool little trick to go a little bit faster. We're going to lock that in place. And we're going to pull that forward. And I'm just going to make sure, and you see how it's in green because we pulled that from another tab. Okay, so next up are taxes. And you see up here, we have this handy dandy effective tax rate box. We're going to hit equals. Go down here and you see you have the taxes, except effective tax rate for all 5 years. Already calculated the average there. We're going to link that to our assumptions box for easy access. And from here, what we're going to do is we're actually just going to hit the equals button, go to our effective tax rate, lock that in place, and multiply by the EBIT. And that's going to obviously be 0 until we end up until we put in the EBIT, and also make sure to make that negative because taxes decrease income. So fix that, carry that forward. Okay, now, so for EBIT, now that we have our EBIT margin, what we're going to do is we're going to go to revenue multiplied by the percent margin. That gives us our EBIT and our taxes. Carry that forward for all 5 years. And you see how EBIT is just 4.45% of each year's revenue. We check that and make sure it's good. And we're good. Now, so we're going to, now, unlike what Brad was doing for the 2020 actual year, we don't have DNA yet. So we can't project that out at the moment. So we're going to leave that blank for now. But we can still do Notepad. Notepad is just your net operating profit after tax. So all we do is we take our EBIT, add in our taxes, but we put a negative there, so it decreases our EBIT. Move that forward for all 5 years. Make sure that's working. Okay, we're going to leave DNA blank. We're going to leave net working capital blank too. And we're going to leave, and what we're going to do with CapEx is we're actually going to link it as a percentage of sales. So what that means is we're going to go over to our cash flow statement here. And we see we have CapEx for every year. Now, make a little row below. And we're going to say we're going to do CapEx over percent sales. Okay. And we see these numbers are only negative because if you remember from a cash flow statement, the numbers are going to be negative when they're outflows. Doesn't mean they're actually, they're having negative CapEx. They're paying money for CapEx. So what we're going to do is we're going to do equals negative, get rid of that CapEx negative thing. And then we're going to divide that out by our sales number for the same year. So we're going to go over to 2016 sales or revenue, same difference. We have that. Carry that forward all 5 years. Make that a percentage. Okay. And then we're going to take the average of that. And that is going to be our CapEx as a percentage of sales. Okay. And now from the free cash flow table, what we're going to do is we're just going to do the equals button, negative, and then we're going to do the revenue number. Okay, multiplied that by CapEx as a percentage of sales. Lock that in place. We're going to carry that forward. Simple as that. And now we're almost done. We can go ahead and just pull forward that free cash flow formula that we built out previously. And pending the DNA and NWC, that is what your free cash flow would look like.
Okay, so now we're going to go ahead and we're going to start by calculating the compound annual growth rate for each of these major line items. So what you're going to do is you're going to go into the cell here. As you can see, you're going to hit equals, and you're going to do the 2025 number divided by the 2020 number, and then you're going to put that to the power of 1 divided by 5, because that's basically the 5th root of it. So you're going to get, that's what the rate is going to be that you're going to compound at over those 5 years. And then you're going to subtract 1 to get the just interest rate, or the percentage. So you can see that because we're going up by 1.68% here, the compound annual growth rate is just 1.68%. So then what we can do here is do Control C, and we'll put this into some of these other things, like we'll do it for EBITDA, And I'm just going to do Alt ESF just to make sure that it's inputting. That's because we don't have an EBITDA here yet. But I'm just going to put this in using Alt ESF because that's going to do Alt ES, and it's going to bring up, I had to copy something. It's going to bring up paste special, and then F is for formulas, and so that makes it so that it doesn't adjust any of the formatting that we're dealing with. Because if I did it from up here, it'd copy in the border. So we're going to do it for EBITDA. I think it's also important for EBIT. We'll do it for NOPAT as well. We'll do CapEx just to see what the rate is there, and we'll do unlevered free cash flow. And actually, we'll also toss one in for depreciation. And you'll see why in just a second. So first of all, I'm going to copy the formatting on these, and I'm going to go ahead and just put it in here. Just to make sure that, oh, sorry. And I just doing, if you just Control C and then do Alt ES and then T is for formats. So I'm just going to put in those borders again. And I have so we'll go ahead and do that. And you'll see why here, because what we're going to do is depreciation in the final year of your DCF has to be equal to your CapEx number for that, because the theory is that basically depreciation is you accounting for or allocating how much you've capitalized over time, and so it's like the reduction in, or you're allocating the use of fixed assets over a certain time period. So if your CapEx number, when you're doing the DCF, you're going to see that we're going to assume in one part of it that the business is running how it is in 2025 into perpetuity with just a growth rate attached. So if you had your CapEx, for example, higher than depreciation, then that would imply that you're going to compound some massive growth rate to your CapEx number. And that essentially, if you were to model how it would work over time, as you would go off, into year infinity, then you would have like an infinite number of fixed assets. And so that's why you have to make them equal. And on the other side, if you did depreciation less than CapEx, that would mean, if you did depreciation more than CapEx, that would assume that you're going to depreciate all of your assets down, and that you're going to have essentially no fixed assets left for the business, which we know is not really possible. That would mean that you wouldn't really be able to generate sales. And for that reason, you just need to make these two equal. So we're going to do, for depreciation here in the final year, we're going to just, because this has to be negative, we're just going to do equals, and then we're just going to make it equal to this CapEx number. So now you see here we have this 1.09% CAGR here, and what we can do with that is we can do equals 1 plus that rate, multiply that by the previous year, and then when we drag this across with Control R, oh, I'm sorry. Yeah, you need to make sure that the rate here is linked, or hard coded in with. I just hit F4 on that individual cell reference, and so that when I can Control R over, you see that now it's kind of stepping up by just that rate of about 1% each year. So we get to this final year, and then down here we can just copy this formula over so that we get depreciation for every year. And then from there, we're just going to add in these terminal year numbers. So the terminal year, you just are going to use these for exit multiples generally, but it's helpful instead of having to link it to 2025, because for example, we might want to increase the number of years in the projection period. So you want to have this extra box over here with just terminal year numbers. So we're going to do equals the 2025 revenue number. We can do the same with EBITDA. I'll link that right here. We can do EBIT as well, NOPAT, unlevered free cash flow, and I'll just go ahead and link one here for the present value. We'll get to that later. But also now we have everything that we need to forecast EBITDA across. So we're going to go ahead and I'm going to highlight EBITDA as well as the EBITDA margin, and we can just go ahead and drag those across with Control R. But you see it copied over these borders, so we want to get rid of this. So if I highlight these cells within the middle, I can do Alt H, B, and then N, and that'll remove those borders that I accidentally copied across. So that's a pretty easy way to do that. Again, the shortcuts, it's going to be really difficult for you to maybe pick up on those in the beginning, but as you go through working with Excel, you'll pick up on all of these very easily. And then with that, I guess that's kind of the end of step 2.